Now we start the problems on leverages. Already we have provided on in attachments the problems of these leverages. Hope everybody have taken a hard copy of these problems on leverages. Refer your problems carefully. The first problem, calculate DOL, degree of operating leverage, from the following data. Sales are given 1000 units, rupees 50,000. Variable cost 25,000, fixed cost 15,000. From this data, we are required to calculate DOL. So this is the first problem. Calculation of DOL, degree of operating leverage. Sales are given as 50,000. Less variable cost. The variable cost is given as 25,000. Subtract 50,000 minus 25,000 is 25,000. This is called contribution. From contribution, we subtract fixed cost. The fixed cost is given as 15,000. Subtract 15,000, we will get 10,000. This 10,000 is called EBIT, or operating profit. Now the formula for DOL is equal to C divided by EBIT. Contribution is 25,000. 25,000 divided by 10,000, that is equal to 2.5. 2.5 is the degree of operating leverage. This is the first problem on leverages. Now see the second problem. See the second problem on leverages. Calculate operating leverage under situations A, B, C. Three situations are given. Selling price per unit is 30 rupees. Variable cost per unit 20 rupees. Fixed cost, situation A 2000, situation B 4000, situation C 6000. The company produced and sold 800 units. So we are required to calculate operating leverage DOL under three different situations, right? Now second problem. Calculation of DOL. Three situations are given. So I am making three columns. Situations A, B, C. Sales. The sales are 800 units are made. Into rupees, the selling price per unit is 30 rupees. So 24,000. From this sales, subtract variable cost. It is 800 units into rupees 20, 16,000. So sales minus variable cost will get contribution. $8,000. Less fixed cost. The fixed cost is given in situation A 2000, situation B 4000, situation C 6000. Subtract will get EBIT. 8 minus 2, 6,000, 4,000, 2,000. Now DOL is equal to C divided by EBIT. Contribution is 8,000. 8,000 by 6,000 is equal to. Similarly, contribution 8,000. 8,000 by 4,000. Similarly, contribution 8,000 divided by 2,000. 4. Here 2. Here 4 by 3. 4 by 3 is 1.33. So we got the degree of operating leverage under the three situations. In situation A we got 1.33. Situation B slightly increased to 2. Situation 3 increased to 4. Why this DOL is increasing? What is the reason why the degree of operating leverage is increasing? The reason is the fixed cost increases. The fixed cost increases. As the fixed cost increases, the operating leverage will also increase. Here 2000, so 1.33, 4000 to 6000, 4. In this way, the operating leverage is increasing. Next problem. Problem number 3. Calculate degree of operating leverage DOL, degree of financial leverage DFL, and degree of combined leverage DCL from the following forms and interpret the results. In this problem, we are required to calculate all the three leverages DOL, DFL, DCL, and after that we have to give the interpretation also regarding three forms. Right, calculation. Problem number 3. Calculation of leverages. Firms A, B, C. Here it is given the output. Output in units are given 60,000, then it is 15,000, next one is 1 lakh. This is only an information, output is given. Now fixed cost is given, variable cost, selling price, interest on borrowed capital. So first we take sales at the rate of, what is the selling price per unit? 60 paisa per unit. Comma, second B के लिए 5 rupees per unit and C के लिए rupee 0.10 per unit. Now multiply. 0.6 into 60,000 you will get 36,000. 5 into 15,000 you will get 75,000. 0.1 into 1 lakh is 10,000. These are the sales. From sales, variable cost at the rate of, variable cost at the rate of rupees 0.20, comma, rupee 1.50 and rupees 0.02. Now multiply 0.2 into 6,000, you will get 12,000. Similarly, 1.5 into 15,000, you will get 22,500. 0.02 into 1 lakh, you will get 2,000. We'll get contribution. So 36 minus 12 is 24,000. Similarly, 75 minus 22,500, 52,000. 75 minus 22,500, 52,500. 4, 5, 6, 7. 75,000 minus 22,500. We'll get 52,500. Now, 10,000 minus 2,000, 8,000. This is contribution. From contribution, we subtract the fixed cost. The fixed cost is given in the problem A, 7,000, B, it is 14,000, C, it is 1,500. This you will get EBIT. So 24 minus 7 is 17,000. Is that right? 17,000. 38,500. And lastly 6,500. Check the amounts. 6,500, 38,500, 17,000. EBIT, less interest on borrowed capital. Interest on borrowed capital 4,000 A, 8,000 B, nil. PBT, profit before tax. So it is 13,000. Here 30,500. Here 6,500. That's it. This is the complete information we require for calculating the leverages. Now we can calculate one by one. First we have to calculate DOL. DOL is equal to C divided by EBIT. Second we calculate DFL is equal to EBIT divided by PBT. Last one we calculate DCL. DCL, combined leverage, C divided by PBT. That's all. These are the three leverages we have to calculate. First, one by one. Contribution. How much is the contribution here? 24,000 divided by EBIT 17,000. Similarly, contribution is 52,500 divided by EBIT 38,500. Next one, contribution is 8,000 divided by EBIT 6,500. EBIT by PBT 17,000 divided by 13,000. Then next one is 38,500 divided by 30,500. Last one is 6,500 divided by PBT 6,500 is equal to. Next, C, contribution 24,000 divided by PBT is 13,000. Next one, contribution is 52,500. PBT 30,500. Last one, C, contribution is 8,000 divided by PBT is 6,500. That's it. Now we'll find out the leverages. First one is 24,000 divided by 17,000. You are getting 1.41. Similarly, 52,500 divided by 38,500. You are getting 1.36. Last one, 8,000 divided by 6,500. 1.23. Here, 17,000 divided by 30. 1.31. 38,500 divided by 30,500. 1.26. Last one, 6,500 by 6,500. 1. Here it is. 24,000 divided by 13,000. You are getting 1.85. Similarly, 52,500 divided by 30,500. 1.72. Last one, 8,000 divided by 6,500. 1.23. Finished. We have calculated all the three leverages: DOL, DFL, and DCL. Now we'll see. We are required to give the interpretation: 1.41, 1.36, and 1.23. 1.31, 1.26, and 1. Now see. Three firms are given: A firm, B firm, C firm. Output is given. Selling price per unit is given 0.6, 5, and 0.1. Multiply 0.6 into 30,000, 36. 0.6 into 60,000, 36. 5 into 15,000, 75. 0.1 into 1 lakh, 10,000. Sales we got. Variable cost 0.2 into 60,000, 12,000. 1.5 into 15,000. 1.5, 22,500. 0.02 into 1 lakh, 2,000. Subtract, we'll get contribution. Less fixed cost is given in the problem: 7,000, 14,000, 1,500. EBIT. less interest on borrowed fund, we'll get PBIT. So we need calculations up to PBT. So after calculating PBT, calculate DOL. C by EBIT. Contribution you have, EBIT you have, divide it and you get the DOL. Similarly, DFL, EBIT by PBT. EBIT divide by PBT, you will get DFL. Combined leverage, contribution by PBT. Contribution here, PBT here. Now we have to give the interpretation regarding these three companies, three firms. A firm. For A firm, you compare 1.41 is the DOL. What is the DOL of B firm? 1.36. C firm 1.23. अगर ये तीनों को कंपेयर करेंगे 1.41, 1.36 तो 1.23, तो किसका DOL ज्यादा है? A firm. A firm's DOL is more compared to B and C. So we can say the operating leverage of A firm is more. Similarly, DFL. Here it is 1.31, 1.26, 1. So compare DFL also. Again, A firm DFL is more. तो DOL A का ज्यादा है और DFL भी A का ज्यादा है. जब दोनों भी ज्यादा है DOL और DFL, तो definitely DCL. DCL is not an independent leverage. It's a combination of OL and FL. ये दोनों को multiply करें 1.41 into 1.31 will get 1.85. 1.85. अब यहाँ पर देखिए 1.7 to 1.23. तो we have concluded firm A is a risky firm. Comparatively, firm A is a risky firm because its OL and FL both are high compared to B and C. So this A firm is going to earn huge profit if the sales are increasing. अगर sales बढ़ेगा तो ये firm बहुत ज़्यादा profit earn करेगा A firm. अगर sales down हो गया तो ये this firm is going to incur huge loss also. More profit, more loss. Anything can happen depending on the sales. Which firm? A firm. Now C firm. C firm you can see 1.41, 1.36, 1.23 lowest. उसी तरह 1.31, 1.26, 1 lowest. So comparatively C firm is the lowest risk firm because its OL, FL both are less. जब OL, FL कम है तो DCL भी कम रहेगा naturally. And first of all, this C firm is having only operating leverage. It does not have financial leverage. Operating leverage कितना है इसका? 1.23 और combined leverage कितना है? 1.23. तो इसका मतलब जो combined leverage है वो खाली operating leverage ही है, financial leverage नहीं है. क्यों नहीं है financial leverage? Because there is no interest on borrowed fund. ये C फर्म के पास कोई borrowed fund नहीं है और borrowed fund नहीं रहने की वजह से interest on borrowed fund नहीं है. There are no interest charges, no financial leverage. खाली एक ही टाइप का leverage है, operating leverage. कौन सा फर्म है? C फर्म. C firm is called conservative firm. It is not taking risk. When it is not taking risk, its profitability will be low comparatively. Now B firm is a moderate firm. The risk of B firm is neither as high as that of A or nor low as that of C. It is having a moderate leverage. So moderate income. ज्यादा भी नहीं है, कम भी नहीं. A के उतना ज्यादा भी नहीं है, C के उतना कम भी नहीं है. दोनों में मीडियम है. तो B firm is a moderate firm where it has moderate leverage. OL भी moderate है, FL भी moderate. लिहाजा combined moderate. This firm will earn normal profits. Now next problem you see. Problem number fourth problem. Calculate DOL from the following information relating to the operation of a company. Only operating leverage. Installed capacity 2000 units. Actual production and sales 50% of installed capacity. Maximum capacity 2000 यूनिट बनाने की है, लेकिन कंपनी जो बना के बेच रही है वो 50% है. तो 2000 का 50% 1000. तो कंपनी is making and selling only 1000 units. Selling price 20 rupees, variable cost 10 rupees, fixed cost. Situation 1 4000, situation 2 5000. So two different situations are there. Fixed cost, right? So calculation of DOL. sales. 1000 units are made at the rate of rupees 20. Comes to 20,000. Less variable cost 1000 units into rupees 10. 10,000. So remaining 10,000 is the contribution. Fixed cost. The fixed cost is given in the problem as 4,000 for first situation, 5,000 for second situation. Fixed costs are different. So 6,000, 5,000, this is the EBIT. Only one leverage we have to find out, DOL. The formula is C divided by EBIT. Contribution 10,000 divided by 6,000. Here 10,000 divided by 5,000. So it is 2. Here 10 divided by 6. 10 divided by 6 is equal to 1.67. That's it. So comparatively this problem is a simple problem. Now, next problem. Problem number 5. A company produces cement which is sold in bags of 10 or 20 kilogram. During the past month, its revenue and cost pattern were as follows. Selling price per bag 30, variable cost per bag 16, fixed cost 10,000, quantity 3,000 bags. Calculate the degree of operating leverage. Only DOL we have to find out. DOL, sales. The sales are given as 3,000 bags into rupees. What is the selling price per bag? 30. 90,000. Less variable cost. So 3,000 bags into rupees 16. 3,000 into 16. So you are getting 48,000. Then 42,000, 80, 90. So it will be contribution. Less fixed cost. The fixed cost is given in the problem as 10,000. EBIT. Contribution is 42,000 divided by 32,000. 42 divided by 32, 1.31. You don't require any explanation. It's straightforward problem. Only DOL. Next. Problem number 6. Sixth problem, see carefully. It's a lengthy problem and important problem. The capital of XYZ Toys Corporation consists of an ordinary share capital of rupees 10 lakh, shares of rupees 100 par value. 10 लाख रुपये टोटल शेयर कैपिटल है और एक शेयर का फेस वैल्यू 100 रुपये है. तो नंबर ऑफ शेयर्स, कितने शेयर्स होंगे? तो 10 लाख डिवाइडेड बाय 100 you will get 10,000. The company is having 10,000 shares of rupees 100 each. So 10,000 into 100 you will get 10 lakh. And rupees 10 lakh of 10% debentures. तो 10 लाख रुपये इक्विटी शेयर कैपिटल और 10 लाख रुपये डिबेंचर, दो फॉर्म्स ऑफ कैपिटल है. Sales increased by 20% from 1 lakh units to 1,20,000 units. तो प्रेजेंटली सेल्स 1,20,000 हो गए. पहले सेल्स 1 लाख थे, For example, 2019, last year sales were 1 lakh. Current year sales have increased by 20%. तो 1 लाख यूनिट जाकर 1,20,000 यूनिट हो गए. Sales have increased by 20%. Selling price 10 rupees, variable cost 6 rupees, fixed expense 2 lakh. Income tax rate is assumed to be 50%. You are required to calculate the following. Percentage increase in earnings per share. This is the problem in which we have to find out the EPS, earnings per share. Previous problems we have calculated only leverage, but in this problem we have to calculate EPS. Secondly, percentage increase, not only EPS but also you have to calculate percentage change in EPS, increase in EPS. And the degree of financial leverage at 1 lakh units and 1,20,000 units, degree of operating leverage at 1 lakh units and 1,20,000. Now, first of all, we have to calculate EPS as well as leverages. So this problem number 6, I am writing calculation of EPS and leverages. See here, I am making these columns. First of all, we are calculating EPS and leverages. It is given in the problem, sales have increased by 20% from 1 lakh units to 1,20,000 units. So I have opened two columns. The first column present sales and the second column increase in sales by 20%. So present sales are 1 lakh, increased sales are 1,20,000 units. Now sales at the rate of rupees. What is the selling price per unit given in the problem? Selling price 10 rupees. So 10 into 1 lakh, you will get 10 lakhs. 10 into 1,20,000, you will get 12 lakhs. Minus variable cost at the rate of. The variable cost is given in the problem as 6 rupees. Now 6 into 1 lakh, 6 lakh. 6 into 1,20,000, 7,20,000. Subtract, you will get contribution. Twelve lakh minus 7,20,000, 4,80,000, 11, 12, barabar. Less fixed cost. The fixed cost is given in the problem as 2 lakh. The fixed cost will remain same, whatever be the level of activity. EBIT, 4 lakh minus 2 lakh, 2 lakh. 4 lakh 80 minus 2 lakh, 2 lakh 80,000. From EBIT we deduct interest on debentures. The interest on debentures. In the first line it is given the company is having 10 lakh rupees equity capital and 10 lakh rupees debentures, and debentures will carry 10% rate of interest. So 10% of 10 lakhs, you will get 1 lakh. This is called PBT, profit before tax. So 2 lakh minus 1 lakh is 1 lakh. 1 lakh